Good morning, everybody. It's Chris from Serene Education with the 4 major news update for the 1st of October 2013. Good morning, guys. Hope you had a great trading day yesterday. Let's have a look at the 4 majors this morning, starting with the Euro against US dollar on our FX8 Ultimate template. And if you look at that indicator box, you are wondering, wow, great sign, which is what we want to see. Okay, it's imperative. If we get moments like this, when we see the indicator box in our favor, it just goes to show that pretty much everything is in favor for longs for the Euro against US dollar. So looking at the overall setup, you can see quite clearly that we had, after the FOMC statement meetings almost 2 weeks ago, we saw last week in particular not really going anywhere really fast. However, the most important thing to be aware of here is the fact that price was still trading above this 50% retracement on the fib monthly level here. So trading above the monthly fib is a very, very strong indicator for upside. Candlesticks were all blue. We had a blue arrow. All our moving averages, including the institution moving average, was below price here at the 38.2 on our monthly. Our weekly was below price. RMI was making higher highs, and our MACD was very much above the zero line. However, still pulling back nonetheless because we were consolidated, but still very much above the zero line. We should have been looking for nothing more than buying opportunities. The only thing that was going to stop us from going any higher was obviously a bearish engulfing counter closing lower than the 50% fib retracement here, which never really occurred. And subsequently, what you can see now is the buying sentiment coming through for Euro US dollar this morning. I take it it's primarily maybe as the European market opens and becomes aware that the US government has passed a shutdown deadline last night at it was 4 a.m. GMT this morning, which would have been midnight on the US market. They had to come up with an agreement and they failed to do so. So shut down. So which means that there's a lot of people that aren't going to be going to work today because of this problem trying to reach a budget deal, this Obamacare, etc., and all that type of thing. But just read the news. There's a lot about it. I guarantee there'll be a lot about it. And subsequently, I think what's happened now is we're seeing a knee-jerk reaction for Euro against US dollar. And any pair primarily against the US dollar, in fact, should be or would be potentially trading higher today as a knee-jerk reaction to that news. Will it be sustainable? Who knows? But the last time we actually saw a shutdown for the US government was back when Bill Clinton was in power, a good 17 years ago, and that actually, they were at loggerheads. Republicans and Democrats were at loggerheads for a good 21 days apparently, which is not really good for the US dollar altogether, because they're also coming up with their budget deal now. I think it's either this week or next week. They're going to be talking about the actual budget deficit, ceiling debt ratio. Are they going to there's another problem altogether. So this is not really going to be boding well for the US dollar overall, and anybody out there who's trying to trade market sentiment for the US dollar. So here, moving higher, that's the most important thing, and moving higher with a lot of momentum and breaking above the current highs. Now you can see we had a number of attempts of those highs. However, on the daily close we saw a lot of pullback, so we had a lot of wickiness, and this constitutes a very strong resistance level. So ideally what we want to see now is a bullish engulfing candle close on the daily. So if you are looking to trade the momentum today, do so very aggressively. However, if any of you are passively trading this and looking for more confirmation, then you would obviously want a nice bullish engulfing candle closing on the daily, because by doing so, it's broken the current high and also formed a nice swing high. Okay, and obviously that's going to fit in quite nicely with any trend announcements. And we would then look to target our weekly fib, which is at the 1371.6 and change. So where price is trading right now to that level is a healthy 130 pips. Now, depending how far the daily closes into that range, we'll then obviously decipher how much you're going to get back overall. But we can go to our weekly, which is 130 pips away, and then also from the weekly to our monthly, we have another 100 pips on top of that. So there's a good 200 odd pips to this particular move to the upside. So be patient here. Look for a nice, comfortable support level on the 4 hour above this level, above this current resistance level here. You can quickly see our 4 hour failed here, evening star, and price fell back. Here another evening star and price fell back. So we have another 52 minutes to wait for the 4 hour candle close. If it does close higher, look to enter, stop, and then target that weekly high as we move to the upside. Sterling, here again, also the same. We saw prices finding support on the pullback just recently after the FOMC statement, almost taking back literally what it made on that FOMC statement day. However, consolidating and then reattempting the weekly fib here, which is where it failed initially. And then today we can see that prices are moving above it. So here again, trading above the weekly fib here at the 23.6. If you get a nice daily close above that, then ultimately target your monthly fib, which is from price to where it is trading now to 163 odd pips and change. So on the 4 hour, there again, Great. 4 hour, we have had the last 4 hour candle has closed above that quite nicely. Nice bullish engulfing candle, very little wick, so almost fantastic entry level. And you can put your stop underneath the 23.6 or underneath the prior swing here, and then target the monthly fib as I mentioned, which is 178 pips away. Here again, the indicator box is painting a very nice positive picture for sterling against the US dollar, making swing highs, which is important. All the moving averages below price acting support, and most importantly, our RMO and our MACD Ostomo indicator are still working in favor with price. So here, a nice entry, and then look to target that monthly fib here at the 38.2 level. Just be aware if there's any news out today on euro and sterling this morning. We have the Spanish manufacturing PMI results for euro, we have Italian manufacturing PMI results for euro, and we have the German unemployment change figure for euro as well. Manufacturing PMI results for sterling, so that's at 9:30 GMT this morning, so be aware of that. However, as long as price maintains above 23.6 here on the above this level here, the 23.6 on the weekly fib, then we should be targeting that monthly high to the upside. And with the news coming out with the government shutdown, I think they will probably potentially pay more attention to that than the figures we are likely to see this morning. US dollar Swiss franc. Here again, if euro is moving higher, we should see the US dollar Swiss franc moving lower. And you can quite clearly see a fantastic indicator here. Let me just move as well all the way so you can see it. All red, and the R squared is complementing that sentiment. So we know the R squared is genuine sentiment, and because it's all negative, we know it's genuine negative sentiment. Fantastic indicator. And if I just move everything back so you can see it, there we go. So swing low, swing low, swing low. Major breakout just recently of this consolidated support underneath the weekly. All my moving averages above price, including that institution, making swing lows long term here on the monthly, and trading moving lower. Beautiful. RMO below, MACD, Osimo indicator below, all looking negative. So now we should be targeting back towards our weekly and monthly on our daily, which are sandwiched together. So it's a nice support level, and we're looking at 128 pips and change to that level. So look for those intraday support levels. Look to target those week, the daily and monthly, those levels down to the downside. You can see the 4 hour candle that's in play right now. We have another 49 minutes, but you can quite clearly see it's broken out of the consolidative range that we saw over the past couple of days here. So nice. If that stays the same, very little wick, a lot of momentum, enter, stop above this current level over here, and target that monthly and weekly fib down here at the 88.75 and change mark. On to the last pair of the day, the US dollar Japanese yen. Here again, still consolidative, not making any higher highs, making higher swings. The institution moving average of it helping price recently, and a couple of days ago we actually saw a break lower. However, yesterday's candle moving up above the institution. Here again, not looking to trade this one because it's so undecisive. It hasn't made any major highs recently. However, it's still finding support levels on the institution. So if you look at the candlesticks, the last arrow we had was red. Candlesticks are all red. Predominantly intraday is very much negative. The RMO is below, the MACD is below. So should be looking for negative sentiment. However, the institution moving average on our daily is in play. Got to get below that, guys. Here again, a lot of people I guarantee would have shorted this on that breakout we saw on Sunday evening. However, failed to see any return on that as price moved against them. Not a very genuine candle, so you shouldn't have actually been trading it. We want to see a decisive candle, and look at what's happened. Yesterday, nice decisive candle up, but straight into this intermediate trend we'll be seeing on the 4 hour time frame. So if I go to my 4 hour time frame, I want you guys to see this. There we go. There we go. That's what I'm doing. The swing high, swing low, swing low, swing low, swing low. There's too much squeeze here. Then we had the breakout yesterday, moving higher, but a lot of indecision counters with the shooting star formation on last 4 hours, and the 4 hours is playing, and right now we are seeing negativity on that shooting star. So this trend line over here is predominantly what we're seeing as the institution, the uptrend, and then we had the breakout, and then the pullback, and then we expect to see the continuation. This horizontal pink line over here is my institution moving over to my daily. I need that to be closed below. You can quite clearly see we got below it and subsequently priced and falling lower because it was trading too close to the institution moving average. I want to see a full daily candle, not a 4 hour candle, a daily candle, because we're trading into an institution moving average. Far too much speculation will jump on board now, and we'll see price moving backwards and forwards, backwards and forwards. I want to get a genuine daily candle away from the institution, whether it be bouncing higher or bouncing low. Very, very important. So this particular pair, still got my trigger alerts on this one for a daily close either side, because at the moment now things are looking more negative for the US dollar set up against the yen. However, I want to see a more genuine sentiment candle from the market. Okay guys, that's it. Short and sweet. Please, if you are using these templates, back it up with sound money management, and most of all, apologies, please follow the rules of the templates. If you are interested in any of these templates, please drop us an email at info@sereneeducation.com for further information. The email will be at the end of the actual video. Otherwise, keep it as simple as possible. Trade with support resistance levels. I use fib levels as my major support and resistance levels, or target levels. Keep it as simple as possible, guys. Trading is very, very, very hard. We don't want to make it even harder. Okay, other than that, keep it as simple as possible. Look and see if there's any news out today. It's going to really factor in price action. And then trade when the opportunity arises. Okay. Otherwise, I'm going to leave you with that. Have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.